Good afternoon, ladies and gentlemen. Welcome to Wednesday's Market Situation Report here at Top Gun Options. My name is Matthew Buckley. My call sign is Wiz, and had a great morning so far. I got to speak about the art of leadership, one of the keynotes that I give, motivational keynotes I give around the country, literally around the world, on leadership with the Mad About or Mothers Against Drunk Driving Dash 5K. So every year we do a Mad Dash, a 5K run. This year it's April 28th down here in Fort Lauderdale. So this morning I got to give my Art of Leadership keynote to a lot of the leadership, a lot of the sponsors, a lot of heavies in law enforcement. Chief of Police of Fort Lauderdale was there, Broward Sheriff Officer. Really special. Obviously, it's a senseless crime, to be honest with you, with Uber, Lyft, and a horrific tragedy, unfortunately, to folks like me. Absolutely destroyed my family, and it kind of changed the arc and the trajectory of my life. So I want to thank everybody who's donated to my personal team. My goal was $10,000. We raised almost 11 grand, so we're at 110% of goal. I like that. Fallen short, though, on my team goal, my Top Gun Options, my company, I want to raise 25 grand. So we're at 83% of goal. So in today's member brief, remember, folks, whatever you donate, I'm going to reduce your annual membership by that much. Some folks have donated an entire year's annual membership, $3,000 to this, and I appreciate that. Remember, folks, not only essentially do you get a year free on me, you get a great tax deduction, charitable tax deduction. Obviously, you're helping out a phenomenal cause. So don't forget about this, folks. I need your help to blow out this 25 grand, and we're short right now. So we have a couple weeks to catch up to this. So I appreciate all the support of the folks who have already donated. Okay, here's what, let me lead with the good news first. A little bit of a rally today. What are we rallying on? Well, the headline is market rallies on what? Trade hopes. Remember, ladies and gentlemen, I think the Wall Street Journal has stock headlines kind of over, in a Word document somewhere. They just copy and paste in here. Stocks implode on trade war fears. Stocks climb on trade hopes. So right now, we have a burner trade, or actually we tried to get out of all of it yesterday on FXI, the iShares Large Cap China ETF, seeing another 1.5% climb today. So we got out of the long calls yesterday for about a $1,500 gain in a week. And now look at this. The bull put spread that we put on is up $1,800 in a week. So this trade is up $3,300 profit on limited risk in 1 week. That's a hell yeah, folks. So we're going to talk at 1 o'clock what we're going to do with FXI going forward. But here we go. But folks, remember, this is the ninth round of talks. So does the dude Vice Prime Minister, what's his name, Lee, hop on an airplane at the end of the week and we're right behind him for the 10th round? Or is this the big one, right? I absolutely believe that the market is going to get a short-term sugar high pop on news of a trade deal, and then we're going to drop. It's already priced in here, folks. I'm going to brief you until I'm blue in the face, and you listen to me. The trade deal is nothing. First of all, it's not going to be worth the paper that it's printed on. China's starting to agree to stuff that we never thought they'd agree to, which is weird, right? They banned fentanyl the other day. Hey, we're going to start cutting people's heads off that sell this stuff. They're starting to cave a little bit, or at least it looks like, which means they're really not going to do anything. Ladies and gentlemen, as I briefed about a month or 2 months ago, they are hacked into everything that's not nailed down, from Goldman Sachs on Wall Street to the University of Hawaii's undersea, program. They're hacked into every maritime university to steal their submarine secrets. They're a bunch of thieves. They're not going to live up to anything they say they're going to do. So a year from now, here's my prediction, folks. We're either back in a trade war, and I don't say this lightly, or we're in a real one, or pretty damn close. Taiwan is a renegade province, if you ask China. If you ask the world, and the United States specifically, Taiwan is an independent country. We sell them S-16s. We sell them M1 Abrams battle tanks. This is the real story, folks. Beijing wants to take over Asia, and they want to, be on par with the United States around the world. It ain't about trade, folks. It's about strategic dominance, okay? So always keep your eye on the ball. So Futures jump. World stocks hit a 6-month high on trade deal optimism. But hold on, folks. Since I said this is baked in, what happened today? ADP jobs number came out. The ADP non-farm payroll, 129,000. 184 is forecast. That is a ginormous miss. And the ISM non-manufacturing PMI imploded. We're starting to see a lot of brown shoots in this country, folks. We're starting to see very, very mixed macroeconomic data. Okay, so, and guess what's on the radar in about 2-3 weeks? Investors brace for hit to profits as what? Costs are still are really rising. Wages are going up. Energy is going up. Oil's going up. Increasing wages and energy costs threaten to hurt companies' margins just as the economy starts slowing down. We're looking at a little bit of a perfect storm here. We are still in the middle of a trade war. Not until Xi hops on an airplane and goes up the street to Mar-a-Lago and inks a deal. So companies in the sectors that are getting hit by the trade deal are getting hit. Energy costs are going up, wages are going up, and our economy is slowing down. Kind of a cauldron for a bad storm to come, which is going to put pressure on who? The Fed. The Fed, back on October 3rd, Jerome Powell says, man, I'm stepping on the brakes here. I am raising interest rates. We had an absolute temper tantrum, and then what happened? We're not going to raise rates. Now, with the economy slowing, there is actually calls for the Fed to cut interest rates. Here's a big canary in the coal mine, or a caterpillar in the coal mine. Caterpillar shares fall on Deutsche Bank's downgrade. Caterpillar, folks, is a big barometer of what's going on around the globe. Why? You hop off an airplane in the middle of Africa, you see a Tonka toy, man. You see a Caterpillar truck. If those things are building highways, building airports, building stuff, the economy's good. When Caterpillar's bad, the world economy's bad. And we've already had a couple other canaries in the coal mine. Federal Express earnings 3-4 weeks ago sucked. Nike sucked, but Nike's earnings sucked as well. Both those companies, FedEx in a transport and Nike in apparel, said what? The global economy is slowing down. But what happened on Monday? China came out with great PMI numbers. So we had this rip your face off market rally on Monday. Not to be believed and to be sold into. If you believe numbers that come out of the Chinese government about their economy, you're not too smart. Morgan Stanley starting to see a 70% chance of a downturn. When? As early as next month. Now, I laugh when I see these type of headlines. A broken clock is right twice a day. So these guys will be right. So if after next month, between the end of next month and the foreseeable future, the market implodes, Morgan Stanley can see, hey, we were right. But what they're getting at, I believe their data, we are way, way, way out over our ski tips here. Don't get me wrong. You have to trade the market you have, not the one you want. Not that I want a down market, but folks, looking at some of this macroeconomic data, this rally is just absolutely nuts. And remember this, the market can remain irrational longer than you can stay solvent. Okay, the trend is your friend, so join it. But remember, this really is a very, very big adult game of what? Musical chairs. The music is going to stop eventually. We're going to give some of that rally back, and it's going to be ugly. So you can be excused for being confused about a recession. Remember, ladies and gentlemen, this S&P, look at this, the chart of this S&P 500 ain't the economy. The stock market and the economy are two completely different things. Look at Barack Hussein Obama. Very, very flat economy. I mean, if he didn't have the Federal Reserve pumping $85 billion of liquidity per month into the market and interest rates near zero, man, the economy would have imploded. But the economy kind of didn't implode. It moved sideways, but the stock market still went up, right? But trade the market you have, not the one you want. I'm telling you, folks, we're seeing a lot of mixed macroeconomic data indicating that the economy is slowing down. But I'll tell you what, if the Fed ended up coming out of the blue and cutting interest rates, I think we'd get a kind of a short-term pop like, yay, more liquidity, or, money's cheap for longer, and then we'd scratch our chin and go, wait a minute. That means the Fed thinks that the economy ain't doing too good. Maybe we should maybe we should get out. Okay, a lot of stuff going on, folks. A lot of balls in the air, a lot of moving parts. We have to talk about a lot of positions. We're going to talk about Brazil as well today. EWZ is our Brazil trade. Love what's going on down south. The Trump of the tropics, Bolsonaro. We have a weekly options trade that we just put on to try and take the pain out of a losing bull put spread that we have, because shocker, political scandal right here. God bless Brazil. They arrested a former president for corruption. What do we do with our politicians who are corrupt? We give them book deals and let them rerun for president instead of throwing their ass in jail. So God bless you, Brazil. I wish our republic was as good as your fledgling democracy. Okay, I got to run. I got to get ready for our 1 o'clock accelerated retirement brief. I'll see my members in there. Happy hunting. Have a great rest of your day. Make sure you hedge, and God bless. I'll see you tomorrow.